And we are in store for another episode on passive investing made simple. This is where a masterclass where I show you how to build passive income and long-term wealth through passive real estate investments. And if this is our first time meeting, welcome. My name is Whitney. I am the Director of Investor Education here at passiveinvesting.com. And I do this webinar series to help you. Maybe you've tried to invest passively before in a deal and just couldn't quite get comfortable making the investment, or actually invested in a deal before and went, whoops, I made a mistake. Or you're just so overwhelmed by all the information out there that you haven't gotten started. If any of that applies to you, then you're in the right spot, because what I do through this webinar series, I have YouTube videos, but also like interviews, special guests. I really help you break through the biggest myths that investors have about passive investing that really keep them sidelined. And we'll also going to demystify through this series different terms, pros and cons, and even dig into a little bit of math regarding passive investing so you can avoid making costly mistakes. And this is where we're going to focus today, is on this point here. And then help you put all the knowledge and action into use so you can confidently invest in your first or next investment. But let's go ahead and crush a couple myths right now. Okay, and that there's two large myths that keep investors sidelined. First is that they say that I have no control over my investment. If I invest passively, I'm just giving it all control all over to somebody else, which there is an element in control that you do give up when you invest passively, but there's a huge amount of control that you keep. And I go through this in the webinar series. But one, you get to understand your investing knowledge, goals and strategies. You get to find the operator that helps align with those investing goals and strategies. You get to decide what markets you invest in, and you get to decide exactly which investment you go into. And you get to do all that research. And most people, I guarantee you, aren't doing that level of research on their own portfolio in stocks, bonds, and mutual funds and publicly traded assets. And even then, even if you do all that research, I can guarantee you that you don't have that level of control on who you invest with and what deals you go into and when you invest with them. The other myth that keeps investors sidelined is that they say they won't make that high of a return. Now, we're not going to get into this today, but there are other videos that I've put together for you where we actually break this myth wide open. And it's not so much about the monetary return, okay? But the return on your time and attention. Okay, that is, you get to take, when you invest passively, you get to leverage an expert team and their ability to, or their expertise in the strategy, the markets, their network, their ability to secure credit and lending, their whole entire brokerage team, property management team, everything like that, in order to get access to a deal. And you even get to leverage other investors' money to get access to larger assets. Okay, but we are going to really focus on the control piece today. But before we dive in, if you guys don't know me, this is me and my crazy crew. This is the whole reason why I invest passively in real estate. I started off investing in 2002, doing live-in flipping and house hacking, totally by accident. But I was like, wow, real estate's amazing. I love this. Like, where else can, I create this type of financial leverage in my life for the time that I invest. Now, I did several of those like live-in flipping, house hacking projects, but I was like, wow, I don't have financial freedom. Like, I hadn't figured out how to disconnect, or unlock those golden handcuffs for myself. I was like, I need passive income coming in every single month in order to do this. And I was beholden to like whenever I got that flip done. And that's really when my husband and I went, oh, we need to get into buy and hold rental real estate. So we started figuring out how to like transition that equity into buy and hold real estate. And now we started off with a single family house. That's what was available to us at that particular time. We weren't accredited investors yet. We hadn't really dug into like even discover what passive investing really was. And we did several projects that way, continued to flip over a few years and scaled a pretty solid portfolio. And then we decided we wanted to, had the potential to step away from our jobs. And by doing so, that's where we hit our next level of achievement. And we're like, okay, if now we need 80 houses to get ourselves out of our job. And I'm like, but all I did is I have another job managing these 80 houses. And that's really where the light bulb came on for me on the desire that we needed to have in order to move into passive investing, to where we could truly unlock our ability to earn income and grow our wealth from our time involvement. And fast forward today, this is my husband and I, we've partnered in over 6,300 multifamily units, 1,400 self-storage units, but these are just numbers, okay? It's the result that most people want to emulate, and that is that we have 100% freedom and choice in how we spend our time. We've been here in Sedona, Arizona, spending December with our family. We still work, but we love what we do. We have like amazing jobs now that we really love what we do, and we have that freedom and flexibility to spend time with our family and travel, and that's what we love doing. And we can help you do that here at passiveinvesting.com. These are just a few of our metrics here at passiveinvesting.com. And what I get to do on a daily basis is work with you guys, our investor base. All right. Now, if you haven't joined me on one of these webinars, we've been interviewing several guests lately, but we do dive into some educational topics. Anything we cover here today, be it in our educational portion of the webinar, or in any part of the Q&A where we touch on financials, legal, or tax, please do not take it as advice. You need to take this information back to your team. You need to consult with them and understand how it applies to your situation before you make an investment. Very important here. All right, guys, let's dive in. Let's talk about one of those elements of control. Remember I told you you can control the strategy you invest in, the operator you invest with, the market that you invest in. How do you do this? Okay, let's talk about exactly how you do this. And this is how to screen a deal. Okay. Now, why would we even want to have a screening process? Okay, I can tell you, I haven't always had a screening process in my passive deals. I've done over 38 deals. But I can tell you, when you do put a screening process in place, your life becomes simpler. It saves you an immense amount of time, okay? And not so much like you can move quickly through the process, but you can weed out those things that don't belong, those deals that don't even belong in your inbox. It can save you an immense amount of headache, because now when you have a screening process, you actually can, how best to put this? You actually can put yourself in the driver's seat, and you're not wondering, does this meet my goals or not? You have a very clear checklist of what your goals are and what you expect to see from an investment. And if it meets it, great. If it doesn't meet it, you can weed it out as well. And thereby, when you do that, it can save you an immense amount of heartache too, okay? Keeping you from getting into deals that, in markets that you shouldn't be in, strategies that you shouldn't be in, timelines that don't meet your investing goals, okay? It can save you an immense amount of heartache. Now, when we get into the screening process, okay, I'm gonna touch on this from a different angle again, but we need to make sure there's this pre-screening phase. Okay. And we need to make sure that that deal is actually from an operator that you've already vetted. Okay. And when you only are looking from deals from operators that you've already vetted, you can be relatively assured that it's probably already going to meet your investing goals and your personal goals, right? Because you're checking that alignment at that vetting stage. And I know so many investors that have come from, say, single family investing, small multifamily investing, that are so focused on the deal and the returns that they forget to actually hop on the phone and either talk to the operations team or even just like do an immense amount of due diligence on the operations team. Okay. But really the very beginning part of this process, when a deal lands in your inbox, this pre-screening step should have already occurred, meaning that you've already talked to the operator you've vetted them, you know that their strategies, that their deals are going to match your investing goals, your personal goals, and also the strategies you want to be in, like the multifamily or self-storage or, note investing. They already meet the strategies that you want to particularly invest in. Okay. So once you kind of prune your inbox, right? And you're only looking at those deals from those operators that you fully vetted, that you know, love, and trust. Okay. Now that's when deal actually gets released from them. This is where we can actually jump into what I call deal screening phase number 1. Okay. Now it's really helpful for you to actually, you can take screenshots of this. That's totally fine, guys. Create this little spreadsheet for yourself. It can be in, G Sheets on Google. It can be something that's housed on your own computer. If you're investing with a significant other, like I do, my husband and I confer on all the deals that, we go into. I have just a Google spreadsheet and I drop all these points into there. And I just grade them, ideal, good, and need to ask questions. Okay. And I'm going to show you an example of my spreadsheet here at the end. That way you guys can kind of replicate it if you'd like for yourself. Now, I am not going to give you my actual spreadsheet. Okay. Why is that? It's because your investing goals are going to be different from mine. Okay. So I don't want you to get confused. You need to create your own. All right. But create a spreadsheet, drop these things in here, okay? Now, again, when you open up that email, it's already from somebody that you know, love, and trust. You're relatively sure it's going to be a strategy you want to invest in, and that operator, the way they structure their deals are actually going to already align with your investing goals. Here, we're diving into phase number 1, okay? We want to double check the market, okay? Is it a market we want to be in? Okay, very important. Remember, that is a level of control. Okay, operator number 1, market number 2. Okay, if it's not a market we want to be in, we need to pass. Okay, now I personally look for growth markets. Okay, and I feel that this, the operators that I, invest with, I'm actually going to suss this out at that phase when I vet the operator. But I'm double checking that the deal that it's been released to me is actually in a growth market. Jobs are growing, incomes are growing, jobs are diversified in the market. If it's a multifamily building, I want to make sure that housing is affordable, rents are affordable, housing prices are increasing, okay? That there's supply and demand in the area, all right? That supply and demand is working in my favor as the investor. I also look for markets where taxes are, favorable for, business owners. Okay. That might rule out like your Western seaboard and, certain parts of the Eastern seaboard, like in the Northeast. Okay. I look for tax favorable, investment areas. And if it's multifamily, I want to be in a landlord friendly state. So the operator has the ability to choose on how they're working with their tenant. Okay. As opposed to being told how they're going to work with the tenant. All right. Number 2, I'm looking at unit count. All right. Really quickly, I personally like scale. I like 100 units or more. All right. Now that can be in a portfolio, maybe like 2 properties that are being purchased together. Okay. That are really close to each other. Or it can be one property, 100 units or more. The reason for this is that, there's an element of scale here. You're picking up one property or more units with one transaction, okay, a little reducing your risk there. And perhaps that you can also reduce your expenses by sharing full-time employees, okay, across those units. All right. I personally love investing in Class A, Class B plus type properties. Okay. There is, I also look for, we're going to talk about this in the next slide, but like some value add opportunities in those areas as well. But I like Class A, Class B. Okay. They're solid. And we're talking about suburban Class A. Okay. Not the inner city infill. Okay. Not your luxury apartments or anything like that. Suburban Class A, very affordable housing. For me, I look at the whole time. Okay. I'm looking for a whole time at about 5 years, somewhere between 3 and 7. Okay. Now, if you have like a Class A property, the whole time might be longer, maybe closer to the 7 years. If you have more of a deep value add deal, maybe the hold time's closer to 3. But I like for things to be underwritten in about 5 years. That's pretty reasonable. It gives you time, the operator's time to execute on the business plan, maybe do a refinance, and then also sell the property. All right, returns. I'm also looking for the returns, specifically at the preferred return, the IRR, the internal rate of return, and then equity multiple. Okay, I'm looking for these. These are going to be, I'm not going to give you specific numbers here because this is class dependent. Okay, class A is going to have a different return profile than a class B versus a class C, but you want to get your metrics in place here. I like deals that have a preferred return. Right now, preferred return is hovering right around 7%. Okay. Internal rate of returns, depending on your classes, might go from like 13 to 18%. Equity multiples, depending on the hold time, might go from 1.5 to over 2. Okay. You're going to understand what your investing goals are and align those, but you want to make sure you have a process to pick those numbers out. All right. I also, encourage you to assess the wealth pillars of an investment. And there's 5. There's 5 ways you can make money in real estate, and you can make them all with one deal, possibly. Is the deal producing cash flow? Is there an opportunity to create equity growth with the deal? We'll talk about that here in a minute. Is it in a market that has a reasonable chance of appreciation? Is leverage being used on the deal to amplify returns? Okay, and are the tax benefits flowing to you as an investor? Okay, even though tax benefits come with real estate, it doesn't actually mean they come to you as an investor. That is deal to deal. You need to double check that. Okay, are you getting your pro rata share of depreciation, accelerated depreciation? Is there the ability for you to participate in a 1031 exchange at the end of the investment? Okay, and then distribution. That's a huge one. Again, I put this in the screening phase number 1, because if you need monthly income, a quarterly distribution may or may not work for you. Okay. I specifically look for deals that are monthly, distributions, possibly even quarterly distributions. If we're getting out to 6-month, biannual, or annual distributions, for me, those deals don't particularly work, but you need to figure out what works for you. Okay. All right, phase number 2, I'm looking for deals that have, ways to increase the net operating income of the asset. Okay, so when you look through the deal, is the business plan, is the operator looking to increase rents, decrease expenses somehow, or add additional streams of income? Those are your 3 levers. Okay, increasing rents, okay, decreasing expenses, and adding additional streams of income. Okay, what is the capacity for that deal? The more levers you can pull, the potential, the greater for the potential for equity growth on the project. All right. Pro forma. Okay, I like conservatively underwritten pro formas. So I want to understand what the income growth is of the asset. What is the vacancy of the asset? Okay, income growth, maybe, projected growth 3 to 5% annually per year, unless there's a reason to increase that. And vacancy, I'm looking for vacancy to be underwritten at least at market vacancy, or double market vacancy right now. And so that is a metric you need to pull out from the pro forma. Also, screening, making sure that the deal has comps that are higher than what is currently being presented. So, and that goes both on rental comps and sales comps. So you don't want to purchase the top property in a market. Okay, we want to make sure there's some wiggle room above us. Okay, so that we want to make sure that there's ways for us to push rents. There's also ways for us to leverage the NOI growth on the property in order to capture the upside on the appreciation. I also look in the investment summary, okay, the deal summary, for a sensitivity, okay, analysis. I want to understand what the range of returns are. Okay, this is something that you might actually have to ask an operator for. More and more operators, I feel, are actually putting this range or the sensitivity analysis directly in the pro forma, which I think is great transparency. But take a look at that sensitivity range. Make sure that they are actually analyzing based on what we call a reversion cap rate. So essentially that they're analyzing what would happen if the market got worse, okay? Meaning that the cap rate actually rises on us, okay? Not goes lower. We all want it to go lower. That's bonus for us as investors. But what happens to returns whenever the cap rate goes higher? We want to see that analysis. And we want to see what happens to the internal rate of return as well as the equity multiple. All right. And then break even occupancy. Okay. Are they putting numbers in there for break even occupancy? That is what, how much does the property have to be occupied for all expenses to be covered? Now, investors, okay, us limited partner investors, we need to understand we are not an expense to the property. We are partners. We share in profits. Okay. When we share in the risk, we share in the rewards. Okay. Now the break-even occupancy just means like what percentage does the occupancy of the property need to be for all expenses to be covered, including the debt service on the property. This can be a range, 50 to 65% is a pretty large range, but that's a pretty good range for most, B and A class properties. All right. I know a couple questions are going to come in. I'm going to make sure that we get through the remaining phases here, and then I'll start answering questions. All right. Now, once I've gotten through the pre-screening phase and I haven't kicked a deal out, and it's made it through phase 1 and phase 2 and I haven't kicked it out, then I'll move on to phase 3. I'm looking at the money. What is happening with the money? Okay, I want to understand that what kind of reserves are happening on the property. Okay, is the operator raising enough money for operational reserves and CapEx reserves on the property? Okay, I also want to understand what is the lending. Okay, what type of lending is on the deal? I like properties that are 75% loan to value or less. Okay, that's pretty conservative. It gives me a 25% range buffer. Okay. Is the lending non-recourse or is it a recourse loan? Okay, now that's not non-recourse or recourse to me as a limited partner, okay, but to the LLC that it is being lended to. All right. Also, what is the interest? How's the interest payment being handled on the property? Okay, is it interest plus principal or is it interest only? And if it's interest only, which I think is totally fine on a multifamily passive investment, because the whole idea is not necessarily to hold it for 30 years. It's to, reposition the property and exchange up into a better property or a larger property. So I think an interest only payment is entirely fine here, but we want to make sure that interest only payment is for the length of the business plan. Okay, so a red flag for me would be like to see a hold period of 7 years and that the property only has like a 2-year construction loan on it. Okay, what happens in year 3 through 7? Okay, there's a huge interest rate risk there. Okay, now part of this can be handled as the operator's ability to extend interest rates. Okay, extend the loan terms. Okay, that is totally valid as well. And then I'm digging into the fees. Okay, how are me and the operator aligned? How are we aligned on the asset and how it's being run? And I do expect to see some fees, right? Because I'm not doing the work. Okay, an operations team is, and there are going to be expenses that they need to cover, and as well as a team they need to compensate. So I expect to see some sort of acquisition fee. I expect to see an ongoing asset management fee. Perhaps maybe even what we call a capital event fee should the property get refinanced or sold. Okay, it does take money to refinance or sell a property. I don't know about you guys, like if you're going through even a personal refinance on your property, you probably have to get it spruced up or cleaned, make some repairs so it can be, you put your best foot forward. Or even if you sell a property, you might have to do some, some repairs around the property in order to get it sold. And then there might be some other fees in there, maybe a construction fee if there is like a heavy value add part of the project, maybe a key partner fee if assets need to be pledged to secure the loan. Okay. Number 4, and I think this is, guys, this is a little golden tip. I don't think most limited partners realize this. You don't want to double check everything. Like, does this LLC that is purchasing a property exist? Okay, so you can go to a website called formsdeed.com to double check the filing. Essentially, this website aggregates who's raising money. Okay, does that LLC exist? Now, if you go there and you actually find the LLC and you see how much money is being raised and how the assets are being capitalized, the LLC is going to say it's a new entity, okay? Because it is, right? Most properties are being purchased in what we call a single asset entity, meaning they're specifically formed for the purchase of that asset, okay? So that the fact that the LLC is new shouldn't be a red flag. The fact that if it's there, not on formsdeed.com, might be a red flag. So be sure to double check that website. All right. So here's just, there's some next steps here, but I want to just point out the little graphic on the right here. This is just, just a quick snapshot of part of my spreadsheet to just kind of give you an idea on how to set it up. Okay. And you're not necessarily looking for a deal that checks all the boxes under the ideal category. That is not the point. The point is to have a process so you can actually make sure you're not missing any parts of the underwriting step. Okay. And that way you can actually compare deal to deal against each other if you're looking at multiple deals, and know where to ask questions. Okay. Know what the thresholds are. Now, remember, this is my spreadsheet. Okay. This may not work for you. You need to create your own. And just because something checks out and, in the need to ask questions category, doesn't necessarily rule it out as an investment that you don't want to invest in. You just want to make sure, again, as we see here, follow our next steps. You will have questions, okay? Maybe it's about the fees on the project. Maybe it's about the loan terms, okay? So make sure that you have questions and you note them. Most operators will also put out what we call an investor webinar along with the investment summary. Make sure to look at that webinar because so many questions are answered between the investment summary and the investor webinar that you can get your answers immediately right there. Okay, but if it's not an investment summary and it's not in the investment webinar, make sure to reach out to the operator to get answers. All right. And once you have all your answers, now's the time to make a decision. All right. And, be sure to make your decision pretty quickly, right? I think there's a lot of mindset to investing as well. And the longer that we kind of let an investment decision hang out there, the more it kind of wears on us. I know it does for me whenever I do that. So make sure that you have your process in place so you can make an educated and thoughtful investing decision pretty quickly. All right, guys, thanks so much for joining me today. I'm not going anywhere. I'm not leaving you guys right now, but I just want, while you're putting your questions in the chat box, if you want to see more webinars like this, if you want to be on the registration list, if you want to see our deals here at passiveinvesting.com, make sure to jump over to passiveinvestingwithwhitney.com, fill out the spreadsheet there. I've got some goodies, free goodies for you, that you can download there as well. And if you need to take off, thank you so much for spending your most valuable resource with me here today, which is your time. All right, guys, let's jump over to the chat box and answer some questions. All right, let's see. I got one that came in through the Q&A. How can you find operators of the same quality as here at passiveinvesting.com? Now, guys, remember, part of my job here is to help you understand not only passive investing, but us here at passiveinvesting.com. However, I'm going to clue you in to find other operators. The way I think of the question, rock stars are going to know rock stars. I want to be in a room with other amazing rock star investors and rock star operators. And the simplest way to do that, I feel, is going to conferences like Intelligent Investor Conference that's coming up here in January, or Best Ever Conference, which is coming up in my neck of the woods in Denver, Colorado in February. How can you be in a room with like-minded investors and like-minded operators? All right. Other ways that you can find, operators are to join, investment forums. There's a couple, investing forums that are specifically geared to the limited partner investor. Okay, but I think you lack a little bit of that engagement and really understanding who the operators are, and you're going to have to do a lot more digging there. And then you can just do a pure Google search. There's other ways that you can do that, is join meetups, be it maybe local meetups. But, I think if you're looking for like a high caliber national, operator, you've got to put yourself in the room where those operators are. All right. All right. One other question here. The Federal Reserve is scheduled to raise interest rates over the next 2 years. How will higher interest rates affect the cap rates with appraisals? We don't know that. I wish I had a magic ball on that. I've seen a lot of chatter, honestly. One would think if rates go higher, then, asset prices have to come down. That actually hasn't proven out as rates have risen, over time. Not always the case. So I think I think we're going to continue to see real estate, quite honestly, is one of the best hedges for inflation. And that's proven out over millennia. I think we're going to continue to see a lot of money being funneled into real estate to hedge out that inflation. Now, I think this is where you want to put yourself in a room with really smart people, an economist. And, I know at the Best Ever Conference, they do that as well. We have our Multifamily Investor Nation Conference. You can sign up for that virtually here in January. We will have some experts speaking on that as well. But you want to fully understand the full economics of it, and not just like try to understand, just read headlines, off of say Forbes Real Estate Council or something like that. It's a really far more nuanced than one number goes up, then one has to come down. There's a lot of other metrics that play here. So isn't there a significant subjectivity in deciding whether a deal is favorable to an investor or not? Sure. Yeah. Let's just start at the very beginning. My goals may be different than yours. Maybe you need appreciation. I need cash flow. Okay. So each investor has to decide for themselves of what is, their goals are and what their metrics are going to be on how they're going to filter out. But if you never put those metrics in place, for one, if you never define what you want and why you want it, it's going to be very difficult for you to, create a path to get there. Once you have that question, you need to then fill out the how. What is your blueprint? And that is what I'm, handing to you guys today, is the blueprint on how to screen a deal. Now, remember, I didn't share with you necessarily my, complete spreadsheet, because I'm going to back it up here. My ideal, you might be looking for Class C properties. Okay, maybe you want to, have like a higher cash flow and appreciation, and you're willing to take on that risk. That would then move into the ideal column for you. Okay, this is just how I'm looking at deals and what my investing preferences are. But I think the part to take home here is to make sure that when you're looking at any deal, you need to make sure that you're looking at the different phases, what the market, the unit count, the class, the whole time, okay? And making sure those line up with how you are setting an ideal for the type of investment you want to go into, for sure. Okay. And just, put it back in front of you guys. Here are the things to look at in phase 2 when you're looking more at the business plan, and then phase 3 when you're looking at the money portion. All right. How much do you interview the operator without offending them? Most operators will give you 30 minutes or so, but not truly the access you need to truly understand them. So, there's a lot. So I think, okay, so let's put it this way. Operators, most operators that I have invested with, they have a website with a ton of information on it. They're doing classes like this. There's podcasts that they've been on. There's a ton of information already out there on them. So you definitely take the time to review all that information and look for consistency in the messaging. Okay. When we go through how to vet an operator, I'll give you a whole line of questions on that. We just don't have time to cover that here today. And then 2, making sure that you are jumping on that call with them and asking those questions. Again, that'll give you a deep dive process on, hitting the major points to get to, to understand who they are as a company on a personal level, and if they're somebody that you can trust, right? I think from there, some people are fine just jumping into a deal, right? They can check the boxes, they can move on. Other people need to have a deeper relationship. And so staying in tune with that operator and watching them for a year. I will not invest with an operator if I haven't known them for a year. So I am one of those people kind of like you. I am like listening to them every opportunity I get on podcasts and watching what they're writing. If there's an opportunity to go on a webinar and ask questions, I'm there. So it's, will an operator be able to jump on the phone with you and spend a whole day? Maybe not. But they are trying to reach as many people as possible. And so try to figure out where those spots are and engage. All right, guys, a lot more questions came in. I am going to probably be able to, let's check the time here. I'll probably have time for like 2 more. How does one go about obtaining information and confirmation that an operator is investing in their own capital in a project? Talk to the operator, okay? For one, you can ask for, capital, statement of uses of capital. Okay. You should be able to see like what is, how the capital is being used and where the investor capital is coming in. You can ask specifically for that line item if you so choose. Forms D will actually also like help you understand like the total uses of capital and such. Now, past that, part of it is trust. Okay, you have to understand, that the operator, they themselves, when they invest in their deal, if they're on the private, the limited partner side, it is a private equity. Okay, that is something that, again, that comes down to the trust part. What mathematical equation calculation is done to determine IRR? Guys, we're going to do a webinar on this because IRR is a calculus equation. Most of you guys aren't going to be sitting here crunching an IRR. I guarantee it. Whenever you see it, you're going to be like, oh, whoa, I need to figure out how to do that on a spreadsheet, and just so I can double check the numbers. But again, that IRR, internal rate of return, that takes into the account time, but we'll tackle that in another webinar. Awesome. Okay, guys. Well, thank you so much for joining me here today. This has been amazing. I always appreciate people, investing time in themselves. If you have any questions, and again, I'll just put this in front of you and you want to hop on a quick phone call, and, if you're not already plugged into our deal flow system, and want to get some free downloads and goodies with me and spend some time with me, jump on over here to investingwithwhitney.com. And I look forward to seeing you guys soon. Take care.